Hey, what's up? Good morning, everyone. It's May 17th, 2023. It's Wednesday currently, so I hope everyone's doing well. Hope everyone is having a great morning so far. And just a reminder today at 4 p.m. Eastern Time, I'm going to be going live with a Q&A, going to be presenting also before that a few things based on the futures market. Right? So I'm going to be doing a little breakdown presentation on the futures market, talking about the profiles, right? How we can actually look at the market as a whole and decide who's generally in control. So that's going to be the premise mainly of today's live. I'm going to talk to you guys about that. And I'm also going to talk to you guys about something specific, talking about summer trading, and not just summer trading, but trading all market conditions, potentially recessionary conditions that might be coming through. Trading this chop, trading any market condition with a very, very simple system and strategy that can really open your eyes to how you can actually trade the futures market with a very, very low amount, very specific tool. So that's exactly what I'm going to be talking to you guys today before I do announce something very exciting. And naturally, you guys probably know it's going to be a free futures trading course that is coming out in the end of May, early June. So come on by for the Q&A and that presentation tonight. Well, tonight for me, 4 p.m. for you guys Eastern time. So with that being said, let's talk about what's going on with the tech side of the market, what's going on with some of the news and earnings, and also talk about the market conditions over the last few days and my expectations for today. So, all in all, tech has consistently led the upside over the past few days, right? NASDAQ triple Q's 330 was a target of mine for the past few weeks, actually, if you guys were watching our market analysis lives that are posted on the weekend. But the tech side of things is getting continuously bought. We talked about that a little yesterday from the 13F filings out of big hedge funds, right? A lot of big hedge funds report their Q1 holdings and their positions that are over hedge funds that have assets under management over 100 mil. And you saw a lot of money being poured into tech, especially around the AI space. So big tech has been, not all big tech, but select few big tech has been leading the way up, the leg up for the market, as a lot of money has been piling into this. And if you recall, about 30% of the S&P and the NASDAQ is really concentrated in a few very large tech names: Apple, Google, Amazon, Microsoft, Nvidia, as well as getting a massive, massive ramp into the 300s. Nvidia up drastically, which helped our swing trades from last week, and also Amazon swing and Google swing is going really, really well, right? So overall, big tech is leading this upside leg, while the breadth in every other sector is not doing as hot, right? Doesn't mean that they're doing miserably bad, but they're in a limbo. Some are doing bad, some are doing okay, some are doing like a bit better than average. But realistically, this discrepancy in breadth is holding out a pretty big divergence in the market. Small caps are getting beat up overall. The S&P has just been in a sideways limbo, right? There's been no volume in the futures market to actually break this move. And the fact that big tech is no longer able to lead the other markets becomes a little concerning for those big tech names. Now, I'm not saying that we start shorting big tech realistically, right? I don't think that's a very strong move, because generally what happens is big money is continuously piling into this, and retailers that are short are getting squeezed on these short positions. I think that it's a matter of patience to see if we can actually follow through on the remainder of the economy and the market, or if big tech turns around. And I think that big tech has more of a turning point to the downside to kind of meet with the rest of the breath, more so than the breath to catch up with big tech. That's just not what's looking as a high probability in the market right now. So even if big tech turns around just by a bit, right, I think it could be enough to pull things back into an equilibrium to get strong-handed buyers in the move. With that being said, I think there could be still some potential alongside in big tech, which I would want to see translated in other markets like SPY and IWM. But these are companies that are getting a lot of news that's coming out, especially around AI, and a lot of big money that's piling into them. Now, when we talk about other sectors in the market, right, we have other earnings from the retail sector that kicked off. We had Home Depot, which dropped about 2% on Tuesday after comparable sales miss estimates and guidance came out fairly light. Shares of Target don't appear to be faring any better this morning, right? The stocks had originally down about 3-4% pre-market. Sales barely grew year over year, while soft forecast was issued due to inventory impacts from retail theft. So spending habits, the macro data may be just as important as individual earnings, and many have eyes on figures as well. So data publishing showed yesterday that US April retail sales on the first upswing since January, but the 0.4% monthly expansion was still below the expected 0.7 figure. So in terms of year-over-year numbers, things have steadily declined since last July, with the latest print coming in at 1.6%, below the 4.9% inflation rate for the same period. So consumers have also continued to shift away from goods spending like furniture, home appliances, and electronics, which will rage during the pandemic. So into spending at restaurants, health, and personal care, and stuff like that, right? Spending more on themselves. So these trends will be on the radar for the Federal Reserve naturally, which are closely monitoring service inflation. Inflation hawks remain fixated on slower rate of progress for service inflation, which remains elevated primarily due to shelter and transportation costs, but also saw the levels of increases for the basket in the past 9 months. So realistically, all in all, we do have a lot of Fed speakers that are coming on the wire, and a lot of them have been sharing concerns, which is propping somewhat of an offer throughout their speakings over the last few days. We also have investors are also eyeing more earnings in the consumer sector with TJ Maxx coming out. We have Q1 results today from Walmart, or sorry, TJ Maxx today. Tomorrow's Walmart, and also keeping an eye on Bed Bath and Body Works, Canada Goose, right? Foot Locker, Ross Stores, right? There's a lot of retail names that are coming out, so we'll see how those kind of fare. If retail sector kind of drops off, right, spending is getting allocated elsewhere, and that's not necessarily very bullish for the economy, despite big tech just continuously rallying. So with that being said, today we have at 10:30 EIA petroleum inventories. No Fed speakers on the docket, it seems, today. Markets are slightly up from a very key level. So let's talk about what we got going on in terms of levels for the S&P, and also throw in some NASDAQ there to give you guys some insight on what we're looking for on the day. So overall, the S&P yesterday, we came down into the low 20s where we saw a massive stuck short and reoffer. Overnight, the 24 was the key level that we were looking for, 23.24, where I was telling the team, hey, you know what, I'm buying 23.24 for the swing into today's session. Right now, we're trading at 40.41, I think was the high around there. So the position's up 16 to 17 points. Multiple attempts at that 24-23 area that allowed us to pick that up. There is a lot of volume that's being built up right now. The main thing that you do have to understand is that we have, or sorry, I should say there's a lot of volume being built up at the tops of the overnight session. But the main thing that you have to understand about these S&P 500 futures is we've been trading a limbo sideways compression range for a very long time. This compressive range is into the low 20s. It starts right 41.20s, the low 20s, and it goes all the way up into 62.63. So a 40-point wide range, and the fact that we get a lot of accumulation of the stuck shorts and volume at these lows, I would think that there would be a move back to the top of the distribution, meaning that I am targeting the bullish side on the day. One of the concerning factors is that we have a lot of volume being built up into this overnight session around the 40, which is a huge pivotal area at the middle point of the distribution that could offer some kind of sell. But I don't really mind. The position's up 16, 17 points. What's risking a few more points to see if we can actually get to the top end of the distribution? So I'm going to be using around 39 or 38 to 40 as a pivot today. As long as we can maintain above that, I think the longs are strong. If we even pull back to 30 and they rebid that aggressively, I still think longs are strong as long as we can hold 24s and see potentially that move higher. I don't necessarily turn too bearish unless they hard sell 41.63, 62. But if we get up there the next time, I think there could be some movement to the upside. So there's a huge divergence between S&P and NASDAQ. NASDAQ, big tech yesterday ran aggressively, right? We broke through the 13,500 for the first time in a very long time, trading into the 13,550. So I'm going to quote the last three digits of the NASDAQ, assuming that the first two numbers are 13. So we got a lot of volume that pressed in and around 545 to 550 on NASDAQ. So that tells us that strong-handed sellers managed to come in into the end of the session to push the prices lower. We have a lot of volume that's accumulating right now at 490, 495, meaning that that's going to be a support. We're at limbo right now between a 60-point range on NASDAQ. There's going to be sellers that attempt the 45 or 545, 550, and there's going to be buyers that attempt the 490, 495, in my opinion. Right. So whoever wins that battle realistically in this high limbo is going to look for the upside. One of the main things that I'm noticing here on NASDAQ is that we do have a P-shaped volume profile from the overnight session. So I'd be a little cautious on the bulls with tech today. I know tech is strong. We had a pretty good pop off those lows on the overnight session, but watch out because there's a lot of volume at these tops. If we fail at those tops again aggressively, I think that tech does take a tumble. You saw a lot of tech names get beat up into the end of yesterday's session. So that's something that we have to watch very, very closely. So with that being said, I want to welcome you all to community.tradeproacademy.com, right? It's our free Discord. You guys can go and jump in there. We'll talk trades, trade ideas, post some stuff, chat some crap. But I want to mainly invite you guys to tonight's Q&A and presentation here on YouTube. We're going to be talking at 4 p.m. Eastern time about trading any market condition, how you can do that with a very few simple set of tools before we have a special announcement for everyone. So with that being said, let's end this longer update than I'm normally used to. And I'll see you guys in the trading room. Take care and chat soon.